All right, let's look at ACHR Aviation. The U.S. market is, of course, closed for the weekend as it's Saturday, November 15th, 2025, but the last session on Friday gave us plenty to analyze. ACHR, ticker ACHR, finished the day at $7.89 per share. It was down about 0.88% on the day, or 7 cents, but that single closing number doesn't tell the story at all. The stock was in a serious battle all day Friday, trading in a wide range from a low of $7.62 all the way up to $8.23. This volatility, with a closing volume of nearly 77 million shares, shows a market that is actively fighting over the company's true valuation. And here's the thing that price chart doesn't show you, the insight you might have missed. Just yesterday, Friday, while the stock was churning, ACHR announced it had completed its flight test campaign for its Midnight aircraft in the United Arab Emirates. This wasn't just a press release about a plan, it was a demonstration of completion. They successfully finished the flight tests in the harsh desert environment, a key step for their planned 2026 launch in Abu Dhabi. This is a massive execution milestone, proving the aircraft's durability, and it seems the market, in its slight downturn, is still digesting what this news truly means for the timeline. The general expectation for ACHR, for anyone who sees it on their Robinhood app or listed next to Tesla stock or Nvidia stock, is that it's a flying car company. It's a binary, almost sci-fi bet. The common belief is that this is a story stock, a concept, a dream that is years away. You might look at it on your SoFi Invest account and think it's pure speculation, a lottery ticket. The expectation is that this is a 10-year gamble on a future that may or may not arrive. But the reality is something far more immediate and, frankly, more tangible. The real story of ACHR right now isn't about a far-off dream. It's a story of intense logistical execution, regulatory chess, and massive capital deployment. The tension isn't if this technology can exist. They are actively flying their aircraft. The tension is about certification, manufacturing, and cash burn. And the news from the UAE, coupled with their recent moves in Los Angeles, suggests the reality of their progress is far outpacing the market's story stock label. Let's break down the recent movement because it's been a wild ride. The stock is still trying to find its footing after its third-quarter earnings report back on November 6th. On the surface, the numbers looked like what you'd expect from a pre-revenue company, a net loss of $130 million. The stock sold off hard in after-hours trading that day, but the reality under the hood was more complex. That $130 million loss was actually a significant improvement from the $206 million loss in the second quarter. Their cash burn is being managed. More importantly, they ended the quarter with a massive $1.64 billion in cash and short-term investments. This isn't a company running on fumes. It's one of the most well-capitalized players in the entire sector, thanks in part to an $850 million capital raise back in June. This is where the analysis gets interesting. When you see a stock with this much volume, it's not just retail traders doing some self-investing. This isn't a simple online investment. The level of activity we're seeing, especially the 120 million shares traded on Tuesday, signals a serious debate between large institutions. While some traders are using the Robinhood stock trading platform or the SoFi trading platform to scalp the volatility, the real moves are being made by the smart money. We have to look at the 13F filings. The institutional ownership of ACHR is high, sitting around 59%, and the major holders are exactly who you'd want to see. Stellantis, the massive automotive group, is a 9.3% owner. The Vanguard Group holds over 8%. BlackRock holds nearly 7%, and perhaps most famously, ARK Investment Management, Cathie Wood's firm, holds almost 5% of the company and was adding to its position as recently as November 12th. When you see Fidelity Investments and its various funds, or BlackRock or Vanguard building positions, you know they're not just making a small bet via the Fidelity mobile app. This is a calculated long-term allocation. This kind of investment is what Fidelity Wealth Management divisions analyze for their high net worth clients. It's the kind of holding that ends up in aggressive growth Fidelity ETFs or Fidelity mutual funds. This isn't a stock for a conservative Schwab Intelligent Portfolios setup. It's a high conviction component of an individual brokerage account, whether that's at Fidelity or a platform built for professionals like Interactive Brokers. The fact that funds are adding on the dips tells you that they see this $1.64 billion in cash and the recent execution milestones as a significant de-risking. So what does ACHR actually do? For those who are new to the name, the company is designing, developing, and intends to manufacture electric vertical takeoff and landing aircraft, or EVTLs. Their flagship aircraft is called Midnight. It's designed to carry a pilot and 4 passengers. The entire business model is built around urban air mobility, specifically short hop routes of 20 to 50 miles. Think of it as an air taxi service. Their primary target is replacing 1 to 2 hour drives in heavy traffic, like from an airport to a city center, with a 10 to 20 minute flight. This isn't about replacing cross-country flights, it's about solving the last 50 miles problem. They aren't just building the planes, they are planning to operate the network, partnering with airlines like United and global partners like they have in the UAE. This brings us to the future outlook and the central tension of expectation versus reality. The single biggest hurdle for ACHR and its main competitor Joby Aviation is certification from the Federal Aviation Administration. This is the only thing that matters. The market expectation was that ACHR was on a path to commercial passenger flights in 2025. This was the narrative. The reality, however, got a cold dose of water in October when reports surfaced that the FAA's rigorous process was complex and certification was unlikely before the end of 2025. This functionally pushes the start of passenger service into 2026. This is the core of the bear case. This delay adds risk and burns more of that $1.64 billion cash pile. But here again, the reality is nuanced. ACHR has already completed 2 of the 3 required FAA certifications, the Part 145 Maintenance and Part 135 Operator Certificate. The final and most difficult piece is the type certification for the Midnight aircraft itself. They are deep in that process right now. The 2026 timeline isn't a failure, it's a realistic adjustment to a process that has never been done before for this type of aircraft. This is why their global strategy is so critical. The expectation might be that this is a U.S.-first company. The reality is that their Abu Dhabi operation might launch first. The news from yesterday, completing those UAE flight tests, is the company's way of showing the world that while the FAA process grinds forward, their technology is ready, validated, and moving towards commercialization now. They are already receiving payments from their partners in Abu Dhabi and are now moving on to pilot training with Etihad. This is no longer a plan, it's a deployment. Then there's the other major catalyst, the Los Angeles market. The expectation was that their partnership for the LA 28 Olympic Games was a good marketing opportunity. The reality, on November 6th, ACHR announced it was acquiring Hawthorne Airport in Los Angeles for $126 million in cash. This isn't a marketing stunt. This is a company spending a significant amount of capital to buy an 80-acre piece of infrastructure to serve as its primary operational hub in Southern California. They're literally buying the airport. This move proves their commitment and provides a tangible, physical asset base for their network. This is the kind of stock that defines a portfolio. It's not a safe harbor like Apple stock. It's not a set it and forget it online investing choice. It's an active bet on a management team's ability to navigate regulatory hurdles and a technological race. For sophisticated traders, using the Interactive Brokers trading platform to model the outcomes is a full-time job. For retail investors, the Robinhood fractional shares option makes it accessible, but the risk is absolute. The The same goes for those on the SoFi Stocks platform. The SoFi Active Investing tool is perfect for this, but it's not for a SoFi robo-advisor. It's a high-stakes, high-reward proposition. The investment help you need here isn't a stock tip, it's an understanding of the risk. We're watching a company that is either on the verge of creating an entirely new transportation market or on a path to a spectacular flameout. There is very little middle ground. Here's the question I have for everyone watching, and I want you to comment below. It's the central question for this entire industry. Do you think ACHR, ACHR, or Joby, Joby, will be the first to get full FAA type certification for their aircraft? So, as we head into the new trading week, ACHR Aviation sits at $7.89. The market's expectation is a simple, speculative, sci-fi story. The reality is a far more